Welcome back to another exciting episode of Breaking Bitcoin. Hopefully you're all doing absolutely fantastic. And of course, today is Friday, November the 8th. That's right, guys. It is Friday. TGIF. We made it through yet another week of somewhat boring, now today, interesting price action, but overall perilous market activity. So big shout out to all you guys who are still with us. Big shout out to everybody who's doing well today. Hopefully you're doing absolutely fantastic wherever you happen to be tuning in from. And whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show on whatever platform you're on, if you're over there on YouTube, hitting the thumbs up button is highly appreciated. Make sure to subscribe with the bell if you want to catch every episode. And to my guys over there on DLive and Twitch, huge shout out to you guys. You guys are absolutely crushing it. We've got a fantastic show for you guys today. We're going to be talking about something that is actually terrifying to me, which is the European Union really ramping up its plans for a central bank digital asset and we're going to talk about the danger to citizens of removing the buffer from central banks and commercial banks. Because as our current economy sits right now, as current first world countries sit, you have the private market interests of commercial banks acting as a buffer between the totalitarianism of fully centralized control over the money. And with the plans, with the recent I kind of want to call it a brochure, but with the recent plans unveiled by the EU and the ECB, they are looking to aggressively start to push back against this. And even if you can read between the lines of what the plan is for the upcoming future, you can really see that there is no other way that this game ends except for a significant decrease in the power and market share of commercial banks and an increase in power and surveillance control of central banks. There's no other way this battle plays out. Just as I've talked many times, once the Bitcoin white paper was launched and people adopted it, there was no other way that this battle ends between centralization and decentralization of currency. But anyways, we've got some fantastic price action going on as well. I do have the ByBit chart behind me. I have gone ahead and created a streamer account. So boom, that's there. That will be there every single day so we can talk about positions. As you can see, I am currently, hopefully you can see it, I am currently in a long position if you zoom in right there. Got about 10,000 contracts on there so far. We're going to break that down as we continue to move forward. We'll monitor that throughout the day and throughout the stream. We're also going to be taking a look at some altcoins because based off of some factors, I do think that if you have the belief that Bitcoin is going to recover from this, and this is a shakeout of late-term longers, individuals trying to long the top, and you do not hold to the theory that is swirling around on Twitter that we are going to descend into the bowels of El Diablo down to 6,500 or 4,900. I've seen ridiculous, absolutely ridiculous numbers. And you do believe that Bitcoin is still in a bullish market cycle, then now potentially might be the best time to start looking at altcoins for accumulation, as I have personally begun doing, only with 2 positions so far. Larger positions, if you count out some minor, smaller holds that I do have. But we'll talk about that today and other things. Before we begin, I want to thank this month's crypto comment giveaway sponsor. That is Spectre Security Coin. Make sure to go check them out at spectresecurity.io. Good friends of the channel if you guys want some help with your security, whether it is your website, your coin project, they are the guys to call. They are the guys to help you out. And of course, today's episode is brought to you by the Premium Trading Group. If you guys would like to learn how we trade, utilize our tools and follow our rules, make sure to join us in the Premium Trading Group and start the path to profitable trading as we do every single day, day in and day out with our members and our team of analysts. Premium.krakencryptocurrency.com. Banners right there. Looking forward to seeing you guys in the group. And with that said, let's give away some crypto as we do every single day. So congratulations in advance to the lucky winner. We're going to pop over to the live scene and we're going to give away some crypto. Let's go. All right, mildly engaged here. Here we go. We're gonna just load comments. Yesterday's video was great. Make sure to go watch it. Bitcoin's dip leaves 9K BTC in the balance. Is the rest of 2019 going to be bearish with the China hype fizzling out? And really, yesterday we talked a lot about more on the price that we might have to pay for all of this blockchain adoption that we're seeing over in the Asian countries and the effect that it might have on freedom. 7 commenters on yesterday's video. Let's randomly pick a winner. And it was Sainsy. He is definitely in the leaderboard for winning. Congratulations, my good friend. He says, I'm going to go try DLive tomorrow, see what all the fuss is about. Well, the fuss is justified, my good friend. Thank you for all the support. I'm just going to go ahead and preemptively send that Spectre to your address that I already have saved on autopilot, my good friend. Thank you so much. And over into the live scene. All right, here we are in the live scene. Let me take a sip of water before we begin here, and let's get over to the charts. Let's do a quick roll call here. Checking in, guys. How are we doing today? Let's just scroll up. Mr. Ether, It's Hard, You Go Chill. Michael Maddox, good to see you. I haven't seen you before. Jules Talenia. or Jules Latenia. That's a cool ass name. Roy Coin Kendi, Agency, good to see you, my friend. Furry Boffin, Wendy, Ken, Dubitat, Ebrius, one of the best names in known history. Over there on YouTube, over on D Live, highly appreciated, and on Twitch as well. Thank you guys so much for the support, for following. Let's, before we begin, let's hop over to D Live. And let's throw some lemons in the chest, guys. You guys have earned it. All right, so we'll be, let's see if we can double the number of people watching on D Live. I will be opening this chest before the first hour break, guys. Thank you guys so much. Peckham and Forza, thank you guys for the donations, my good friend. All right, let's get into the live scene and talk about Bitcoin's price. We got some interesting things happening. I added the EMA up. Price currently trading at 87.84. So we have had a pretty swift, volatile stab down. We are below the baseline. We are below several things. And again, as we talked about yesterday and over the last few days, overhead order block resistance, which is where we did end up rejecting from. We can trace the origin of this order block back to the first descent and rejection from the $14,000 areas. We actually wicked into the area on a daily basis and ended up closing a reversal doji in that same order block as well. That formed a bullish order block. We can see the price did bounce from that area 3 times. Twice with other reversal dojis and once with a large demand wick down into that zone. Again, that area was from 94.27 to 96.99, as we talked about before. That level made a conversion from a bullish order block into a bearish breaker, because that's what happens when you close below the order block. It becomes a bearish breaker. And generally, the setup in order block theory is to then sell into any price retreat or rally back into that area. And as we can see, overall, from a price action perspective, that was a good move. Anybody that did short this upper area is in quite good profit right now. I was not in a short. As I said, I stayed flat. And just as of today, started picking up on my longs. As I said, I had limit orders set down. They were for about 50% of my position. And then I started increasing that as well. So I'm about 75% into my position as we sit right now. Let's see here. Average entry price of 88.44, actually. I think, right? Yeah, I think that's what it says. 88.44. I feel pretty good with that. Now I have, as you can see here, if you can see on the screen behind me, this isn't the wide angle, so you might have trouble seeing it. I do have a limit order for another 5,000 contracts down at 85.50. We'll talk about that in a little while. I'm less confident that level will get hit, but if we do end up having another dip to the downside, that's where I would like to get filled at, based off of generally horizontal support and resistance. Not really an order block, because there's not a significant shift in market structure at that point in time. But again, it's just more of a pivot level, an important point for Bitcoin. And really, the only thing that we have to go off of here that's objective, unless we pull up the weekly chart and start looking at our baseline and start looking potentially at our EMAs, and we can develop some lower targets for there as well. But again, I'm not bearish on Bitcoin, and I would be very hesitant for individuals that are attempting to short Bitcoin at these price levels. Typically does not pay out for you guys very well. I would rethink your assumption. And again, not direct advice. You guys are, of course, able to take any trade in any position that you want, and I encourage you to do so. If your analysis of the market is that this is overall bearish price action, then I want you to get in. Then I want you to take the. I don't want to say I want you to get into a short. I want you to trade based off your system. I want you to make decisions based off your trading system that you have built, and I want you to come to the stream to hang out and regroup and recharge your batteries, because that's what this stream is for me. This stream is to recharge my batteries, renew my conviction, renew my confidence, do my absolute best to distill the wisdom and advice that I've learned over the years of trading to you guys. And I know that means a lot to you guys, and it means a lot to me, because I know from the emails that I get, from the members that we have in the premium group, from the environment that we have in the Discord, it's an amazingly positive environment and experience for me. And I hope it is for you guys as well. So, as I said, price currently trading at 87.74. So let's start from the beginning. On the daily time frame, we'll zoom down to the micro, start from the macro, zoom our way down. Scrooge McDuck, good afternoon to you as well. DIY guy and Third Eye Trader, haven't seen you in a while, man. Philip over there in Manchester, thank you so much. Farbod, JJ Beachbum, Roy Coin, thank you guys so much. Roy Coin, I have not published a volatility expander yet. I also have not published Parallax. Going to San Francisco set my plans back a little bit, and I'm currently working on those right now. I got a list of projects this long, and I'm definitely getting to them. They are definitely on the list to do, because I want to get that stuff out. But they are being actively those indicators are being actively run through programmatic backtests. Well, they've already been run through the backtest. They're currently being forward tested. So once I have a little bit more data, I'll also know what I need to tweak in the code. I'm testing any errors. I'm testing my biases with these indicators and making sure that they're production ready, that they're going to be as useful to the end user as they are to me, utilizing them as the developer. 87.83 now, as I talked about yesterday, did have those limit bids. Looking essentially, the setup that I'm looking for, this is PTP strategy, reversal baseline bounce. I was expecting a movement down to the reversal baseline, to the baseline, which as we sit is currently sitting around 88.21. So I do have an average entry right around that baseline right there. Filled a little bit at 8,800, filled a little bit at 8,700. And overall pretty comfortable with my position right here. Now, if we have a little bit of a stab down to 8,500, I'll get filled there as well. But I'm really not keen. I'm really not on the table with price going much lower than that. But as a trader, I will adapt to whatever happens. Now, what is interesting to note is that on today's candle close, we're not actually getting a PTP short signal. So it's not even justified to be going into a short signal, something that I don't even really like doing after a big volatile movement to the downside. And it's not a huge movement. It's only huge relatively because we've had so much, a very, very low volatility and overall boringness in the Bitcoin market over this last week, and leading into San Francisco as well, interspersed only with the one difference of, again, the third largest move in Bitcoin's history, which was this 42% pump off of the lows, huge bear trap, up to, again, reject from that resistance order block that we talked about and discussed. Do I use PineScript to backtest my strategies? I use a variety of backtesting mechanisms. Pine Strategy Tester, which is one of those. Yes, it's, I would say, the trickiest. All backtesting, all programmatic backtesting represents its own difficulties and nuances. Pine, for some reason, seems to be a little trickier for newbies and developers alike. Again, that's definitely an area of strength of mine because that's the one of the few programming languages that I've actually put time to becoming very, very proficient in. But again, a lot of the backtesting that I do is also manual. I do take the time to sit down and manually backtest my strategy on the chart because I'm a dinosaur, man. And that's exactly how I teach people to backtest programmatically and manually in the PTP course and in the premium trading group. But I have a huge bias and huge emphasis and a huge I prefer manual backtesting because I like to see the trade setup. I like to see if it makes sense if I would have entered there because I know how I trade and I have my rule set right here. Whereas you do really have to write the code very, very, very specifically. Again, these are problems that are overcome. Again, I have a great team as well, but I have a bias toward manual backtesting. That's just me. Any Hoosers. Let me take a sip of this water here. I'm really parched this morning. Okay. Where do we want to start here? As we talked about, we never got the regular PTP long signal. It would have been a continuation trade that we were looking for at that point in time. We never did get the crossover of Minx and the noise line. These are the default setting for Minx. The only difference here is the removal of the zero line. Interestingly enough, if we put that zero line back onto the chart, which we will do right here, and it's kind of dark, it's not very easy to see. We'll make that white. There you go. You guys can see it now. We are getting a zero line cross. So as a centered oscillator, Minx is now moving into the bearish territory, the bearish control zone. Over on the commodity channel index, which we are using as a confirmer for our strategy here, we are still above the zero line. We're not bearish on commodity channel index yet. Very similar. Time transformation also breaching the zero line as well, putting us in bearish territory. But what's interesting here is not only am I taking a reversal baseline bounce, and I allowed myself a little bit of allowance to fill up below the baseline. I will let myself hold this trade for one additional day, and then if we do not get a nice close back above the baseline, I'll most likely exit the position and look to probably short at that point in time a bounce. I'm looking for a very specific movement out of this. But again, my thoughts and my setup is to the upside. I don't really think it's appropriate to be shorting Bitcoin now. I think that if you were in a short and capitalized on this movement, I would definitely begin right now, if you haven't already, scaling out of that profit and looking for the next potential setup. Very, 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 very likely to not only get a lower time frame or intraday bounce right here, but again, my sentiment and my trade setup is predicated on a larger, more sustained continuation of this movement to the upside. So I do not see at this point in time price moving back down to the lower bullish order block, bullish breaker at this point in time, between 82.08 and 79.91. If we end up getting back down there, then I'm going to have to be more long-term bearish based off of a few things. And to really understand that, before we delve back down into the micro here on BTC, let's go over to the weekly time frame. Obviously, on the weekly, we are below the baseline. On the monthly, we are below the baseline as well. So DCAing is still there, still doing Money Mondays. And if we take off the baseline and pull up our EMAs and we look at where our secondary baseline is right here, our 55 exponential moving average, it is sitting at 79.14. So that, and we can see that that's exactly where we did end up getting the higher time frame bounce off of previously in Bitcoin's price. So that would be key support, key level to watch, key level to reposition and rethink your ideology here, your trade setup and your concepts and your thoughts. Closing below the weekly 13 exponential moving average. So for those of you who are utilizing that as a baseline and looking at the higher time frame of the weekly, again, dollar cost averaging into your spot position on BTC is still acceptable, is still something that I am practicing as well. As I said, utilizing the weekly and those metrics to determine my longer term investments and when it is opportune to begin DCAing and when to exit DCAing into BTC. Those of you who are concerned about the daily chop, again, this is one of the reasons that I moved to the 30 period Donchian rather than the 13 exponential moving average as my baseline. Those who are concerned, who are in the group, who are familiar with the concept of when do we hedge, when do we not hedge, up or below the baseline, potentially you might want to start off with the weekly chart to help determine those metrics, because often, and it's fine to use the 13 on the weekly because often those metrics are going to be far more germane. If you want to be a little bit more radical and use the 55 exponential moving average and definitely look at positional setups, then that's fine as well. As you can see, you would still be unhedged on Bitcoin. You would still be spot long on Bitcoin. You would have been spot long on Bitcoin back here in April of 2019 after the pump up. So you would have gotten an average fill a little bit below 6,000 and you would still be up 30% on your spot holdings. Again, don't get that return in any other asset class. You don't get that return in any other asset class. It's absolutely amazing for long-term holds. Now, going back to the daily. Going back to the daily, again, below all of our moving averages here on CC/EMA, but that's, I mean, we're below the baseline as well. So of course we're going to be below. We're below the median of price. Again, the entire trade setup predicated on reversal baseline bounce as we sit right now. Not a whole lot more to talk about in that regard. The reason why it's not appropriate to be looking at a PTP regular signal for a short setup is our volatility expander. Not our volatility expander, is our volatility filter. It's not telling us to go short. It's not telling us to go short. It's not telling us to take any swing position at this point in time. So you know what we do? We don't, because that is designed to keep us out of bad trade setups. Doesn't matter if the trade is good or wrong. We know that when we follow the rules over the series of our trade setups for the month, for the year, we will be profitable. That's what we do. Okay, going down to the 12-hour. 12-hour, again, also would have not given us a 30-period Donchian short setup. If we go to the CC/EMA, whether you're using the 13, whether you're using the 21, that potentially would have given you a 12-hour signal. But also, I do want to be upfront with this, because generally people who are going to be using the EMA setup are going to be looking at that secondary baseline, the 55 exponential moving average, as a more key level of support. So there is a high probability that this is not a setup you would have taken. We did get, if you are ignoring the secondary baseline, if you're ignoring the 55 EMA as a potential pivot point for price or as a level of support, then again, we do have all cylinders firing. We have Minx below the zero line and below the noise line. We have CCI below the zero line. We have Wadatar explosion giving us the go ahead as a volatility filter. We also have time transformation violating the zero line as well, for those of you who are using time transformation or the Fisher transform as your momentum indicator as well. So there is a valid 12-hour setup. Let's go back and look at those downside targets. Would you be scaling out of profit right now? I would assume so. On the 12-hour, let's go look. Let's pull up the data window over here. On the 12-hour, let's see here. On the 12-hour here, your first take profit would have been 87.20. So yes, absolutely, you would be 50% out of your position right now on your short setup. And I would recommend, again, moving that stop loss to break even at 90.10, 90.10, somewhere around that region is definitely where you want to update your break even stop loss to now that you are in good profits. Again, I would be a little bit more aggressive with my profit taking, but again, I leave that in your domain, in your hands. Zooming down, again, what else do we see here on the 12-hour? Again, not a whole lot. Let's get rid of our EMAs. Let's bring back up the baseline. Again, also, you could be set up for your entry right around now for that reversal baseline bounce, getting an entry of around 88.71, which is where the 30-period Donchian was on the daily. Or again, if you were using probably the most attractive fill would have been the, well, no, a little bit less attractive than the 30-period Donchian, actually. The 55 EMA coming in at 88.94. So getting a less of an attractive fill at the secondary baseline. Coming down to our 4-hour time frame, what do we see on the 4-hour time frame? Again, we have about 1 hour and 37 minutes. We do have a fairly interesting hammer candle, price action style candlestick analysis. Again, typically reversal candle. We don't have any really bullish follow through yet. The only thing here that really stands out to me is deep wicks down. Generally, I'm looking for wicks on lower time frames, though, to be a little bit more determinative of price. We're going to go all the way down to the 15 because I think there's some interesting things going on. Now, here is one of the biggest fake out candlestick patterns that I see, and this is generally known as 3 black crows. There are a couple other names that it goes by as well. 3 consecutive bearish candles. People are like, that's when you want to initiate a short. That shit don't work on Bitcoin. That is not a good sign. Typically, when you see 3 very strong red candles like that on any time frame, generally the movement is going to be, at least for the moment, exhausted. And you want to be looking to take profit. You want to be looking to shift your bias, and you want to be looking for your next trade setup at this point in time, especially after a big, nice, look at this. Look at the volume spike. Let me zoom in here. Look at the volume spike on this candle. Let's pull up in the data window and let's just look at, this is the Bitstamp chart. So here we have 2.89 thousand Bitcoin traded, and over here 3.945 thousand Bitcoin traded. This is not where you want to be entering into your short after a huge volume spike to the downside, and the high potential is that all potential sellers have already sold at this point in time. And I can justify this. I want to point out the lower time frames so that you guys can actually see this play out in reality, so you guys kind of know what to look for in the future. Looking at our more active time frame right here, the 2-hour, a lot of guys in the group are running 2-hour PTP systems, which is absolutely fine. Allows them to do their 9 to 5 and then trade about 4 or 5, trade anywhere from like 3 to 5 candles per day, which is fine. That's kind of the more, I'm trading at 8 o'clock in the morning. I'm done by 5 o'clock at night or 6 o'clock at night. That's totally fine. They're spending time with their family and they are hedged or out of the market. And that's totally fine. And then they're generally also running their daily or weekly PTP systems, which allows them to hold open longer term positional trades as well. And for many that want to take this a little bit more seriously, I think that's probably a good approach. That's a good approach. There are great lower time frame opportunities on Bitcoin. The volatility is there. And you need to capitalize in a way to capture it. But again, as I always tell people, when you're coming into the group, when you're learning to trade a systems trading approach, you want to start on the daily and get that really well fleshed out. That allows you to trade 1 time a day, 30 minutes a day, very low, overall very low risk. Track your statistics, track your journal. What we do is we transform traders who are used to watching crypto Twitter or used to watching YouTube trading, and they're just kind of just flopping around willy-nilly without a big plan. And we teach them, hey man, this is how professionals do it. You track everything, you log everything, you back test, you forward test, you manage your risk, you position size, and you execute consistently across time and space. And what that does is delivers you from where you are now to a profitable trading setup forever. That is how we trade. That is how we do things. Now, on the 2-hour time frame, let's take a quick gander here, bringing back the baseline. Obviously, we would have been able to take a 2-hour short setup. We would have had to take this continuation setup right here. This continuation setup right here, UTC time, the open of, so about 6 o'clock in the morning is when this candle opened up. So actually, you would have been waiting for 8 o'clock in the morning. This is on the 7th. This would have been yesterday, 8 o'clock in the morning UTC time. You would have entered into a pretty low period of volatility, but you would have been able to capture about 3 or 4 candles here of good profit, maybe TP2. If you're still in the trade at this wick, you would have captured this as well, but it's unlikely. Depending if you're using a different exit strategy, then you most likely would have been out on this candle, which is good. Price mostly just goes sideways. And then you do get a nice, good continuation re-entry over here at about 6 o'clock. So at 8 o'clock this morning, you would have entered on the close of this candle at 8 o'clock this morning at 91.31, and you'd have been able to ride this down. Now, on the close of the last 2-hour candle, you just got your exit signal. So again, this is more justification for if you are in a short, you have now gotten a very clear signal if you're trading the 2-hour to exit your position, fully exit, fully get out of that position, grab your profit. You just shorted from 91.31. And if I track this down, let's see what that was. 91.31 to the close of this candle. First off, let me turn off so I can know what I'm measuring to. Yeah, so you grabbed a 4% trade over the course of about 4 hours. That's 6 hours, excuse me. Absolutely fantastic. Be happy with your profits. Take the money and run. Go, 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 go. Now, what do we see even here on the 2 hours? A little bit more deterministic than the 4 hour here. Price is going sideways. What do we have right here? Huge volume spike to the downside. Big volume spike right here that also indicates a little bit of buyback, and then low volume. Low volume. What does that mean? Where does volume come into the market? At the beginning and at the end of a trend. That's it. That's where trends turn around. That's where trends begin. What does this mean? So if you see volume come in at the end of a movement, what is that denoting? Take profit and prepare for the trend to shift in the opposite direction. It's very simple. Okay, let's go down to the 15-minute, and I wanted to kind of dissect the anatomy of today's movement and talk about how you could have avoided being out of this bounce right here. So let's start right here. Let's start on the 15-minute time frame. So we're going to start about 7 o'clock in the morning today, UTC time. What do we have? We have price mostly going sideways, and then initiation of the downside right here. Again, 15-minute PTP signal get you in right here at the at about 7:30 a.m., 7:45 a.m. Get you in around 91.43, roughly the same area where you would have gotten in on the swing trade on the 2-hour time frame. Takes this all the way down, gets you out right here. That's a good scalp. You don't capitalize on this, so you're out on this movement. But here's what I want to point out. If you take a wider view of this, we have, again, what do we have here in this area right here? Between, where does this really begin? Between 10... This is the 7th, so about 10 o'clock in the morning on the 7th, so yesterday. So all of yesterday and the early morning today. All of yesterday and early morning today, you have price largely going sideways. I don't see a single attractive trade in here. There's not a single one. There was no trade, lower time frame trade on Bitcoin from yesterday to today, unless you are running a bot. Listen, I don't want to say that nobody made a profitable trade setup, but it's such a tight margin, low volatility, and it's just a very dangerous area to trade. And as you can see, our volatility filter pretty much keeps you out of this entire aspect of the market, even on the 15-minute chart. But again, you do have some good initiation right here. You do have a break in trend. You do have volatility filter rising explosion level, telling you to go ahead and get with the get-go. Excuse me. Take another sip of water here. But what's the other conspicuous thing? I want to point out, what is the other conspicuous thing that's missing from this consolidation area right here? Volume. Look at this. There's no volume. None. There's no volume. You need volume to trade. If there's no volume, you shouldn't be trading. And then we do get that volume. We get that volume coming in right here. We get the initiation of the downside. Volatility filter tells you it's fine to take a trade. You can take this trade to the downside right here, and then you get the volume spike. You get the first volume spike right here, but why should you be cautious about that? Why should you not be buying this dip? Now, it's fine if you did. It's fine if you did, but I just want to point out something that can allow you a little bit more nuance. You have your first sell-off breaking out of consolidation, violating I don't want to say a fairly key level of support. We were just kind of hanging up in the air there on a higher time frame. This is more, again, this is the plunge down to the baseline. So first off, if you're using the daily and you have that baseline right there, so you have your buy-in target, that would have kept you patient because you have a target. You have an area where you know you want to re-enter into the market and take price in the opposite direction for the purposes of a reversal baseline bounce. So PTP gives you that, gives you the target, gives you the patience, lets you know, hey, anything in between here and 8,800, I'm not touching. Because price is likely to be drawn down to that $8,800 level. So why do I want to sit and draw down? That doesn't make any sense. Why do I want to sit and draw down? So here's the kind of key importance here. So we have this sell-off, volume spike denoting potential. This might lure you in. It's the first breakdown movement, and that volume might lure you in to think, okay, look at all this volume coming in. This must be the end of the downtrend. But all you have to do is look at what happens in price. Look at what happens in price. Immediately, almost immediately, you get price rising back up. You get price rising back up. What does that denote? What is that telling you? So first off, there's a couple things here. There wasn't a big volume spike. I mean, it wasn't huge. It was fairly significant on the 15-minute chart. But there's a couple things here. First off, rising price immediately after a dip down lets you know that people are buying the dip, and they're suckers. They're buying the first bounce, right? I've said multiple times, don't buy the first bounce. You're on lower time frames, don't buy the first bounce. And again, they were right, because what happens then the whale. So what is happening here is this is the initial movement. This was the real movement that the whales and traders wanted. This movement right here. This is the big candles. This is the big movement. And you can see that in the volume, right? But they need to position the market in a specific way. So obviously the order book was thin. Somebody noticed, a large player noticed an inefficiency in the order book, and they used an aggressive market sell to begin this cascading effect of pushing price down. What does this do? This triggers a lot of stops, allows the individuals to get positions, and it also suckers people in who want to counter trade, and they start buying the dip up right here, this area. There's about 2 hours of dip buying right here. The first dip, they're suckers. And what happens? The price gets taken against them. All their liquidations get triggered. This is the cascading effect that the bears really wanted, or that the bulls really wanted actually in this offense, or the larger players really wanted, because they have to trick people in to buying the dip so that they can take price lower, trigger their liquidations, and you can see this in the volume spike right here. Here's the big volume spike. Here's the big baby. Here's the candle that they wanted. They want to trigger all those stop losses so they can get filled on their longs. That's how it works, all right? It is a game of institutional investment manipulating, or institutional traders manipulating retail traders. And if you're aware of these patterns, and if you're also, again, just using something like PTP, where we trade like ninjas and we avoid this nonsense, then you can capitalize on these movements. Don't buy the first dip. That's for suckers. Suckers got smoked. Suckers got liquidated. And here's the important thing. What did you notice immediately after that? Here's another, this is the further follow through as to why I'm a little bit bullish on price right now. What happened? So let's get rid of these. Let's get rid of all these, because this is starting to look like Madden 2019 here. Crypto trader. Thanks so much for the follow over there on Twitch, my good friend. I'll get rid of it here in just a second. If I just keep Control Zing, there we go. And it's gone. So let's zoom a little bit in on the second leg down. So what happened? Big volatile move down. Again, look at that volume spike. That's the one that they wanted. And then what happens? Does price start rising like it did over here? Are suckers buying the dip? No, they got smoked. What are they trying to do now? Look at price droop lazily down after that huge volatile move. What are suckers doing now? They just got smoked on their longs. Now they're trying to fucking short. That's a sign. They got smoked. And now they're trying to take price down at the worst possible time. Trying to take price down at the worst possible time. They got smoked on their longs. They got smoked on their longs initially here. They entered in mass. They got smoked on their longs here. Now they're like, okay, fuck it. I just got smoked twice. Let's go short. And guess what's going to happen? Jericho candle up straight up, man. That's what's going to happen. We got a little bit more confluence here as well. We got some pretty big wicks down. We got a Bulkowski W pattern here. We've got a double bottom. Again, that stuff's mostly nonsense, but just adds a little bit of confluence when you already have the higher time frame perspective of where price is eventually going to go, and you have your trading thesis, and then you can come down to the lower time frames and look for little nuances to add a little bit more zang to your trades. Okay, don't start here. Get here. Start with PTP. Start with the daily. Start with a meso time frame setup if that's what you want, and then once you are confident in what you're doing overall, and you have ideas and you have goals and you have discipline, then you can come down here and fuck around. Don't start here. Most people start here, and that's why they get smoked. So don't be these guys. Don't get smoked. Just trade smart. So just going to sit patiently. I'm going to fill on any more little dips, and we're going to see price go up. Okay. Crypto Trader says, actually, I believe there will be one more tiny dump, which will complete the LA wave. We typically are pretty, what's the word I'm looking for here? Like, we poke fun at Elliott waves. I'm not a big fan of it. But again, as you guys can see back here on the big screen, I got a limit order in at 85.50. So yes, any break of this level, any wick down, again, as I said, I'm going to fill and capitalize on any minor little dips to the downside for sure. Okay, and that's pretty much where we're at, guys. that's what we got going on. And we are currently trading at 8802, looking for a little bit of a breakout. Where's the level we really want to get above to kind of denote this? That's a little conspicuous right there. Honestly, I'd really be looking to just see price start to violate and get back in to this really bearish candle right here. It's not even a bearish engulfing, because for it to engulf, there has to be something of significance for it to engulf, and that's candlestick theory and blah, blah, blah. But what we're really looking for is price to just get above this 8800 level pretty strongly, most likely up, down a little bit, up, down a little bit, and then I'm just kind of looking for that Jericho breakout to the upside, which I do think is going to come. It's going to come on the volume spike. Where do I see the price being 1 month from now? To the right on the chart of where price currently is right now. I don't like to do long-term projections like a lot of people do, because that's going to necessitate you pulling out trend lines and fib tools and waves and nonsense and stuff that it doesn't help you make money, man. It doesn't help you make money. It's very simple. Get a baseline on your chart. You're either bullish or bearish on Bitcoin on the weekly time frame. You're either in Bitcoin or you're hedged up. I think that's the best place to start. I don't even think one should be worried about where price is in a month, because we're just natural there. Like long term, I'm obviously bullish on Bitcoin. I'm pretty confident that we're going to see six-figure Bitcoin one day. Honestly, we've got a lot of flack coming in from governments. We've got a lot of flack coming in from banks. So it's possible that we go into a pronounced bear market. I'm totally fine with that. Bitcoin is the future. Decentralized currency is the future. And as long as you have that conviction and that courage to hold your positions for a long time, then you don't really need to be worried about where price is going to be in a month. But again, I think that that it's more likely that price will be higher than it is right now in a month. I'm bullish on Bitcoin as we currently sit. We really need to violate some weekly levels for me to be looking at like these lower targets that people are throwing out, like 6,500 and 4,500. I'm okay. I believe the price can absolutely go down to those levels, but I'm just not convinced. I don't see the technicals that back that up, and I don't see the fundamentals that back that up either, to be quite frank. So I would be pretty cautious about those really low targets that people are starting to throw out there. All right. B-Flow says, I'm talking fast like I mixed Mississippi grog and Carolina Christmas blend. Joke's on you, man, because I did 2 tablespoons of Mississippi grog and 2 tablespoons of that sweet, sweet Carolina Christmas blend, man. I even bought myself a new coffee grinder just for the Carolina Christmas blend, because that whole bean luxury is delicious. Thank you so much for that recommendation. I bought a big old 1 pound bag of that Carolina Christmas blend. It's fantastic. Highly recommend that, guys. If you guys want some advice on your coffee selections, hit up Mr. B Flow. Also holding down the Midwest. Shout out to you, my good friend. All right. Whew. All right, we did it, guys. We did it, and we can now move on to altcoins. We made it. Okay, let's go. I fucking love my job. Going big dog out of the gate. Let's go back to the daily. Ethereum and the other major dollar pairs. Again, price is up to 8808 now. The other major dollar pairs. Oh, hold on. Before we get to the other alts, let's take a look at. Let's take a look at CME futures. CME futures, again, a little bit lagged behind because I don't trade the CME, so I don't really see the point of trading for like the 15-minute like faster trade. Blah, blah, blah. But again, CME futures trading at 88.15 and holding the baseline pretty strongly, pretty firmly here. So again, another little bit of positivity. If you go over to GBTC, we had already initiated the bounce here on GBTC prior to the dump on the spot market. So if you're looking at GBTC as a leading indicator, Bob's your uncle. Now, with that being said, let's go over to the ByBit list. We'll start off with Ethereum USD here. Make sure you guys can see here pretty clearly. Okay, good. Let me know if you guys are okay with this with the setup. I do understand that because I did bring the widescreen over here so I can see the charts more clearly as I'm doing the daily show. that they are now a little smaller, that the screen is a little smaller. So let me know if that is overly annoying, if it's too hard to see. And what I'll do is I will change the resolution on the monitor to like something like 1366, 768. And that will allow you guys to see it a little bit more clearly. You won't be able to see as much to the left and right, but you'll be able to see what we're focusing on a little bit better. So let me know, guys. He says, what did Justin say? Nobody fucking knows, but it gets him going. Ah! Robin, thank you so much. Thank you so much for the positive comment there, my friend. I miss the old setup, but this is cool too. Thank you, man. Thank you. I mean, life's a transition, man. And honestly, I'm going to switch to this real quick so you guys can see this. Hopefully you guys like it. Bam. The lighting in here today is not as good as I'd like it to be. Obviously, I'm lit up pretty good. I probably should put a rim light behind me. That would make me pop a little bit better. But I do need to get a fill light over here in the right corner. I'm just using the light coming into the windows, and it's just a little cloudy today. And that's, I guess, one of the like things of like using natural lighting. Obviously, it's good on the complexion, but. I just got, that is the key light. I got pretty much a key light over here, though, coming down on me. Definitely need to put a fill light over here in the corner to brighten up just the dark edges a little bit. And then potentially a rim light. But again, just a constant transition. But hopefully you guys like everything that we got going on here. Did a lot of work. Oh, by the way, check this out. Boom. Amazon came today. We got a lot of foam panels, so hopefully if there's any reverb in there, that'll be gone. Can't hurt them, they're foam panels. And, oh, dear Lord. This is all the swag from San Francisco Blockchain Week. I mean, I had to ship it back. There's too much. So we're going to be doing a lot of giveaways, guys. You guys want t-shirts, hats? We got you. I had to be a little bit more careful with that one. There might be like a couple like things in there. All right, moving right along. Back to the analysis. Okie dokie. You go chill. I'll send you a hat. I got to do the, you know what? I emailed DLive. I need to check my email and see if they got back to me. I didn't see it this morning, but, you know what? I got them on Telegram. I'm gonna hit them up. And see, I need to get the new, I need to get the 4 people that won the CC giveaway from the San Francisco Blockchain Week live stream. So definitely want to get that merch out to you guys. Giving away a Lino hat, the two DLive fuzzy dice, as you guys can see over there, and a Ledger Nano. We're going to be giving away a Ledger Nano as well. And by the way, to Mr. Sorry, man. Don't want to say I forgot your name, but I forgot your name. To Mr. David. Thank you so much. Over on Twitter, thank you so much for participating as well in the Twitter giveaway. And we're going to send your Ledger Nano out tomorrow. Tomorrow is where we're going to send it out. So thank you guys so much. All right, hey, you know what? We doubled. We got 21 people watching on DLive. I think it's time, guys. We're gonna open up the box in 5 minutes. 5 minutes. So if you guys want to do the thing where you're like, yeah, the box. Yeah, dude. You guys deserve it. Thank you guys so much for the continual support, man. You guys are absolutely amazing. I really like the DLive platform. It's really nice. So I'll definitely do anything that I can do to support you guys and give back to the community as well. So 57.9. Is that Lino or lemons? Again, I'm sorry, guys. I'm still like learning the stuff. It says 57.9. I don't know if that's it's lemons, right? 57.9 lemons in there, and we're going to distribute that. I heard there would be hats. I was promised an endless ocean of hats. Sir, where are the hats? VeChain delivers the beef. Yes, they do. Okay, let me pull up my charts. look at this. This is what's so interesting about Ethereum. It's kind of hard to not be bullish on Ethereum right now. Ethereum continues to outpace Bitcoin. Look at how well Ethereum is holding its value. Look at the lack of sell-off on Ethereum compared to BTC USD. FUSD is there. I bet if we go look at the FBTC chart, it'll be even a little bit more positive. We see, what's interesting is that if we go over to crypto bubbles, again, overall bearish day with a few individual coins that are outperforming. I actually have a position in GXS, which, is this a GXX? That's Leo. Screw that token. That's a scam. I don't see GXS on here, but I do know that GXS is up. Shout out to my friends over at Blockstack. That's up as well. What's this little baby tiny one? USD coin. I know that GXS is up, so pretty happy about that. But overall, generally we have a little bit more. This is a little bit more significant sell-off. We're in the 5 to 10% pullbacks on alt BTC valuations. You kind of also have to look at the alt USD values as well. Oh, sorry, this is the USD value. So again, excuse me. Let's go look at the BTC values. If we look at the BTC values, we can see that the majority of coins are actually up against Bitcoin. What does that mean? They're holding their value on the dollar better. They're outperforming Bitcoin to the dollar. That's why alt BTC pairs are up. Alts are worth more in Bitcoin than they were previously, for the most part. If we go look at their dollar values, again, because they're all tethered to the Bitcoin, because Bitcoin to USD is lower, obviously their dollar valuations have gone down as well because they trade against the dollar. It's not the best form of triangular arbitrage. Triangular arbitrage, really the wrong word there. Triangular valuation, perhaps, is a better term for it. I digress. Congratulations, Ken. Had a limit buy on HL after the earnings yesterday. Got in at 207. The low yesterday was 206. $2.30 right now. That's awesome to hear, man. Okay, back to Ethereum USD. Ethereum holding its value very, very, very well. And again, on today's daily close, going to be bringing us back into the buy zone between the trade qualifying line and the baseline. Baseline sitting all the way down at 176.25. So again, if we didn't see that steep dive down on Ethereum that we saw with the others. So I actually am still in my long position on Ethereum. I don't know if I want to add to it. I really want to see what Bitcoin does, because if Bitcoin does take another leg down and closes there on the daily, I do have to rethink my position, and I think that's unlikely. But if that does happen, then I'll most likely take that opportunity to begin entering into my position. And what I'll probably have to do, to add to my position on Ethereum, what I'll probably have to do though with Ethereum though, what I'm thinking is more likely is I'm looking for that reversal to the upside, looking for it to get back above, or, kind of waiting for a bullish movement from Bitcoin first, and then potentially entering more into Ethereum. But overall, there's no really rush for me to do that. There's no need for me to do that. I'm comfortable with the Ethereum position. It is a full risk setup, so I don't need to add to that. It's good. It's chill. But Ethereum overall performing quite nicely. There's not a whole lot to talk about technically here. We are back within the buy zone. If you wanted to really bottom feed right here, I would set some limit bids at 176.25 or around the region of the baseline, looking for that same setup that we're set up right now on Bitcoin for that reversal baseline bounce. Otherwise, CCI still in bullish territory. Wattatar explosion not signaling for a short, even though on Minx we do have the cross under. So we don't have a short signal on Ethereum either as well. Volatility filter keeping us out of the short on the daily. Good stuff. Going down to the 12-hour, we don't even have a 12-hour setup. We actually have a reversal baseline bounce right now on the 12-hour time frame. 4-hour time frame, you could have grabbed this short trade right here. No, you couldn't have. You might have been able to grab it right here and grab TP1, but again, big volume spike, wick to the downside, followed by a doji, typically a reversal sign. Let's go to the 2-hour. 2-hour got you a little bit more active. 2-hour would have been 2-hour would have let you basically short this entire movement. Let's see, you could have gotten in right here, grabbed this profit to the downside. You would have been out here, actually at the low close, which is great. And then you could have gotten back in here and grab this movement to the downside right here. So overall, quite nice on the 2-hour time frame. And what are we getting as of the close? As of the doji close, the 2-hour doji close on the last 2-hour candle, it's telling you to be out. It's telling you to be out, especially with this big volume spike to the downside. I mean, these things are pretty clear and obvious. And what's interesting, you can see the exact same thing here on the 15-minute time frame. You can see the initial breakdown. You can see the suckers buy in. You can see the second sell-off culminating in a massive volume spike. Sideways, again, drooping lazily down to the downside as suckers, late-term shorters, try to pile into the non-dominant direction anymore. And what happens? Boom! Kick in the face. Price to the upside. Love it, man. I love my job. Okay, getting over to EOS as well. EOS, I had a profitable trade on this. I already hit TP1, price closed out at break even. We're putting in a pretty long-legged, not a long-legged, it's a spinning top doji. I'll say spinning top doji. On the daily time frame, bouncing off of 1 ATR above the baseline, which is our trade qualifying line. There's really nothing to do here. With EOS, I'm going to sit on the sidelines, mostly focus on Bitcoin and Ethereum, and wait for another good setup on it. I don't need to take these by proxy anymore. I've got Ethereum, which tends to outperform Bitcoin, and I've got Bitcoin, which I've got a pretty good grasp on its direction. ZERP, on the other hand, starting to look pretty negative, man. Starting to look pretty negative. I got smoked on this. I was in a long trade on ZERP. Hit my stop loss. That was a loss. And now we have another daily candle close below the baseline. If price closes like this, I actually think flipping direction would not be inappropriate to take price to the downside. I want to be a little hesitant about it. I'd probably use less risk because I'm a little bullish on the other USD pairs. ZERP, again, even though it is in a long-term bearish trend, does tend to follow the other dollar pairs around. So I'd be pretty hesitant on like a full risk short setup on XRP here. But we do have everything signaling for us to go ahead and take the short. So this will be a trade that I'm going to be looking at tonight, but I am going to be using lower risk based on what's going on with Bitcoin. All right. With that being said, we've gone over the majors on ByBit. By the way, guys, if you're tired of those wicks on BitMEX and you guys want to check out a better platform, we do most of our damage on ByBit. There is a link down in the description below if you'd like to trade along with us. ByBit is generous enough to sometimes do competitions where individuals who are in our group are allowed to take place in that. There's going to be a huge ByBit global trading competition coming up here pretty soon, which I am a captain for. So you guys can sign up for the team if you want to. There's going to be a lot of huge prizes. Really looking forward to it. We were in the EOS competition. We placed in the top 20. It was pretty good. We could have done better, but again, I'm pretty happy that we traded in the top 20. There was like 200 teams in the EOS competition. Shout out to those who did very well in that, actually. But for the Bitcoin trading challenge, we're looking to crush it and land boots on the ground. So if you guys want to sign up for ByBit, links down there. Get $60 if you deposit some BTC as well. Can't withdraw, but you can trade with it. So that's there as well, guys. Thank you guys for the support. Love you guys very much. Over to DLive, by the way, because I do want to do that giveaway. Thank you guys so much. You guys have been waiting earnestly in anticipation. 58.9 lemons. Let's distribute these babies. Boom, go. Mm-hmm. $12 seconds. Boom. Shout out to you, Big Sainsy with the big wins, man. 21.9 lemons to you. Ben Kirkland, my good friend, 13 to you. You go chill, 9.6. Now you can buy your own hat, my good friend. Four is the world, 7.9, and Lefty on fire, 6.7. Congratulations, guys. Thank you so much for the love. He wins again. It's like never-ending wins, man. It's just never-ending wins. All right, guys. Let's go over to You Are My Sunshine, My Only Sunshine. By the way, I just gotta say this. I took my daughter, who's about 2, to the doctor this morning, really early this morning, because she's had this just kind of croupy chest cough. And it's been a while. It's been almost a month. And listen, I don't want to trigger anybody, but she's vaccinated. She is healthy. She's a beautiful, darling little girl. Now, I'm not into the more extreme, like anti-vaccination and stuff like that. I'm just a firm believer in letting a child build up their natural immune system. I think that's very, very important. I do think, and again, I'm also very aware of the antibiotic crisis that we've got going on. There's a lot of we've over-abused antibiotics by just giving them to kids. Now, my child's never been in distress. If she would have ever cried or had a fever or anything like that, the first place we're going to is the doctor. But it's just been a little chest cold, runny nose, overall just a nuisance, not anything serious. But it's just good. I just want to give a shout out to my doctor, her doctor really, because, you know, I took her there and he listened to her, checked her out, and he was like, look, man, like we can give her antibiotics, but obviously, but honestly, she looks great. She looks healthy. She's running around the office. She's pulling on my stethoscope. She's, you know, she's super, super happy. You said she hasn't had a fever. You haven't been running a fever. He's like, just let her fight it off, man. And she's going to have a much better immune system for it. And I just think that's awesome because that is so different from my experience when I was a child, when my parents would take me into the doctor's office and they're like, you know, doctor, he said that his, you know, he said that his back hurt because he woke up on the wrong side of the bed. And the doctor's like, antibiotics, that will cure everything. I mean, that's really how it was when I was a kid. They were like, oh, you bit your tongue? Antibiotics. Oh, you put on deodorant wrong? Antibiotics. Oh, ate ice cream you didn't like? Antibiotics. And now they're like, let's bring that back, you know? That's good. So shout out to those guys, man. Again, definitely not advocating for, I mean, honestly, again, I don't want to trigger anybody because I know that there's firm people and firm opinions on both sides, but I will say that I don't have a problem. As a parent, you're allowed to make any decisions that you want, that you think is beneficial for your child. But if you allow your child to be in distress or get hurt, that's child abuse. And I would be the first in the pack rallying against you. I mean, your job as a parent is to protect your child, and your job as a parent is to make that child hale and healthy and hearty as possible. And just remember that that's your job as a parent. Not to use your child as a flagpole for your own personal philosophies. That's a human individual, man. You're not raising a kid, you're raising an adult. Okie dokie. It is 12:57. I think that's a good time to take a break, guys. A couple people in the chat are like, screw this guy. Absolutely hate him now. Started off good. He was like, oh, his daughter's healthy. Now I feel he's personally attacked me. Hit the thumbs down button. Just kidding. Listen, guys, I'll be right back. Gonna take a brief break. Gonna fill up the old water cup. Yes, I'm going to fill up the old water cup. I'll be right back in just a couple minutes, guys. Make sure to prepare your comment. I think that's a good use of your time. If you're going to leave a comment after today's show, where you can be entered to win some Spectre free, just leave a comment. Let me know what you learned. Let me know what you like. Let me know what you think of the setup. Prepare those as you wait in the break. Just be a couple minutes. I'll be right back, guys. Let me know if you got any chart requests, anything you want me to check out. When we come back, we're going to dive into the news. And then as we wrap up, we're going to check out some Forex as we look to close the Forex week out. And we might even look at some indices, guys. Really excited for the next year. In 2020, we're probably going to get into stocks as well. So really excited. Everything's coming together just beautifully, guys. And I'm so pleased to be on this journey with you guys. Don't go anywhere. We'll be right back. I'll catch you in a moment. Back in the live scene with some water. Hopefully you guys are doing good. Recharged. Okay, good to go. Scrooge McDuck asks, there's a +1 tick time discrepancy between the CC Ichimoku and the stock Ichimoku indicators, regardless of time frame. Why the difference? Which one to use or trust? Let's check it out. Excuse me. So we're going to go to indicators here. We're going to type in cracking, which you guys can do to pull up all of our indicators. Some are proprietary. Well, they're all proprietary. The code is hidden. But you guys can use some of them, such as our EMA script, Watatar Explosion, which is our most popular public indicator, and Ichimoku, which is our second most popular public indicator. So we'll pull up Ichimoku, get rid of the old baseline, and then we'll also pull up stock Ichimoku. And we'll look for discrepancies. $9.26, $52.26. So it seems to be plotting the base and the conversion lines identically, as you can see. You can see the, so if you look closely here at the blue line, which is the conversion line, and the red line, which is the baseline, those are the same. The difference the difference here is how the cloud is being plotted. And I wrote my own script to calculate the cloud. And I mean, the reason why I did this is I don't like the way that stock Ichimoku does. You're saying that there's a 1 tick time difference. Obviously, as you can see, my cloud looks much further into the future than the stock Ichimoku does. So clearly our calculations here are different. Let me take a further look at this with our developers and see if that's an issue. Let me know. Send me, I think you've sent me some DMs. I just unfortunately haven't had time to get to them. And maybe that's what you DM me about. But if you send me a little bit more detailed explanation as to the negative impact of this as opposed to the positive impact, I can get that to, not only will I have that when I review the code, but I'll also review the code with, I mean, really, it's me that wrote the code, so. But I'll review this with the couple guys that I do my work with now, and I'll have an update for you. I'll let you know by Monday's show, okay? This would be the first complaint of that nature that I've heard about CC Ichimoku, so I'll definitely take a look at it. Thank you. Please do. Sanjeev Dasgatra says, hi, please show $1. $1 just for you, sir. And then to the news. Mr. OneCoin was actually one that I was looking at last night. Hopefully I can explain why. Was looking for a potential reversal baseline bounce, especially with the Doji. But then what's happened with all the USDT pairs? It has had a little bit of a plummet based off of Bitcoin's price. So honestly, I would still be in bullish sentiment for altcoins right now. I'm still fairly bullish on altcoins at this point in time. We are at pretty low prices, but again, we've been at pretty low prices before. If we kind of zoom out, we have accumulation phase right here and then a higher low, which is good. What we were looking for, as we always are looking for, we've tested this level of resistance coming in the form of the baseline right here, looking for a higher low to hold above the median of this price range. That is the breakout pattern that I always talk about, that I look for. So looks good, fits the bill, fits naturally. I would be a little tentative to go ahead and enter now, especially because it's not a PTP signal. I always prefer just buying the breakout, but definitely want to keep our eyes on. I don't have any recommendations as for what to do right now. We really want to keep our eyes on BTC USD. This is not really the time to be establishing speculative positions for trades on altcoins. This is the time if you're bullish on Bitcoin long term, this is the time though to start looking at alts that are really, really, really low that you think have a good potential to appreciate in the next cycle. That would be my recommendation. Help a brother out and like this. Come on, y'all. Spoon Powered 23. Thank you so much. All right, we've got a lot to talk about today, guys, so I'm not going to waste any time. All right. Now, the first thing that I want to talk about, and this is probably one of the most alarming things that I've read today, is the headline of this article is alarmed by Libra. The European Union is going to look into issuing a public digital currency with a draft that they've just put out. And Reuters is reporting on this. This is a draft text being prepared by the European Union. So this is a provision. This is a measure. This is a recommendation for legislation that could be adopted by finance ministers around the European Union as early as next month. And this could see a new regulatory campaign being waged against the cryptocurrency space. And obviously, after this is all brought on by Facebook's disclosure of its plans to launch Libra, their private global digital currency platform. And that was met with a lot of hostility, especially in the European zone. Now, their response right now has been to draft and consider having the EU commission a public digital currency of their own, and basically saying, not in this house, Libra. We got this. We'll do our own central bank issued digital asset. And that terrifies me. I'll go into why. Now, obviously, Facebook, the social media giant, revealed back in June its plans to launch its digital currency, which they dubbed Libra, by next year. 2020, we're going to see Libra on the streets. But by September, EU heavyweights like France and Germany were pushing back, claiming that such a project posed risks to the financial sector. And now it seems they will have right in their hands, because they're now considering this public digital currency alternative. Now, according to this Reuters report, who did preview the draft proposal that came out on Tuesday, that is being prepared by the EU on the topic of cryptocurrency, the commission that was tasked with writing this report is also urging the economic bloc to develop a common unified approach to cryptocurrencies. Also, so not only are they recommending not allowing Libra and the ECB issuing its own digital asset, they're also recommending a comprehensive approach to cryptocurrency regulation, not in a good way, going so far as suggesting that they should ban certain projects that were deemed too high risk for retail investors. Now, if adopted, these provisions that are documented in the draft would escalate a regulatory campaign in the European Union against cryptocurrency, which so far, cryptocurrencies in the European Union have seen only partial and uncoordinated regulation in some member states. Now, a quote here from the draft says, quote, the ECB and other European Union central banks could and should usefully explore the opportunities as well as challenges of issuing central bank digital currencies, including by considering concrete steps to this effect, said the draft. And this was prepared by the Finnish EU representatives, and is obviously, this draft is still subject to possible amendments and change. You guys know how legislation works. Now, the draft text is scheduled to be discussed by finance ministers today on Friday, with a prospective adoption to be officially ratified by the time they have their next meeting on December 5th. So after our bellies are all full from Thanksgiving, we can sit around and look at what their official decision is supposed to be. Now, an ECB official, so an official from the European Central Bank, described the most ambitious version of this plan as one that would allow consumers to use electronic cash, which would be directly deposited at the ECB without the need for bank accounts, financial intermediaries, or clearing counterparties. Now, all of that launch pad, that pitch sounds great when it's coming from Bitcoin. It sounds terrifying coming from the ECB. Now, while these intermediaries from the world of commercial banking and payment processing are still needed right now to process any form of digital payment, which is just about any payment when you're using a piece of plastic or a number, this may no longer be the case if the ECB is to leverage the efficiencies of cryptocurrency and essentially took over these commercial banks and clearinghouses' functions, with one benefit, clearly, being dramatically lower operating and transactional costs for not only the banks, potentially the end user, but that raises technical challenges and opposition from these commercial banks, because this would obviously significantly hurt their private market interests. It would impact this significantly. Now, as we can see, it does appear that regulators and finance officials in the EU were not really concerned with stablecoins like Tether or cryptocurrencies like Bitcoin until Facebook announced their plans and their financial aspirations via the Libra project. Now, with the implication being that Libra's global reach could reach billions of existing users on the Facebook platform, it seems the regulators are getting spooked, and they should be. Last month, Libra was reprimanded by G7 by a G7 group of nations who stated that the project should not be allowed to launch until international risks were evaluated and addressed. Oh my God. Now, we can see that under this regulatory pressure, it does seem like we've seen the Libra project lose a quarter of its original members who were supposed to be on the Libra Council, leading many to wonder if the project will even be allowed to launch, as we've speculated ourselves on this channel. Now, at minimum, if you take nothing away from this, take this away. At minimum, Libra has clearly triggered a regulatory response from European Union officials to the cryptocurrency space, with Markus Ferber, who's a German conservative who leads on financial matters in the European Parliament, saying, quote, "At the very least, we need a robust regulatory framework to deal with virtual currencies. The Commission has been way too complacent on the issue so far. With the threat of Libra on the horizon, it's time for action now." Now, history may prove that Libra may be the motivating factor behind the European Union's direct action in the development and launch of its own public digital currency. Now, let me explain why this terrifies me. Because everybody wants to rally against the banks. Everybody wants to talk about how terrible banks are, and I'm totally with you guys. But here's the thing with our current structure. The way that our free market environment is set up right now, you have European central banks and the state as the center heads of power. But their power is diffused by the free market, by the private market, and you have private commercial banks acting as a financial buffer in between them and their aspirations. And unfortunately, just the centralization of power. Even if you believe that these individuals are not mercurial, even if you believe that these individuals are not malevolent, even if you believe that centralized authority is fine, well, hold on, let's take a step back from that. You would have to be concerned about centralized authority. Even if you believe that they don't have ill intentions, even if you don't believe that, the central banks just want to get all the power and Illuminati lizard lords and blah, 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 because I don't believe in that's not nonsense. But what I am concerned about is what we've seen historically. When you centralize too much power in any nation state, any institution, anything, it leads to corruption. I mean, the infamous statement, the power corrupts, absolute power corrupts, absolutely. And it's been proven true time and time and time and time again. That's why the ethos of Bitcoin is create a system where we know through game theory that everybody is trying to screw over the other person. You create a system that incentivizes people to be honest and is nearly impossible to cheat at. On top of that, you decentralize authority. You have no central authority so that individuals are forced to cooperate to make the system work. Otherwise, it fails and everybody loses money. That's the beauty of the Bitcoin model. And that's why it's being adopted everywhere. Now, even Facebook doing it. But again, they're following with the Ethereum Central Council of centralizing. Anyways, moving on. Now, what we have to realize is that even though the existence of commercial banks allows them to profit off of end users, retail users, regular people like you and me, it allows them to take advantage of inefficiencies that we are not, either through lack of knowledge or either through lack of capital or either through lack of time to take advantage of. That is how they make their money. They take advantage of the fact that they have a lot of money and they act as a buffer between the source of money and the end user. That is how banks make their money. That is their entire role. And historically, if we take a long view of history, or if we look long into the future, we can see that that is a technical inefficiency and will be resolved. Just as we see that all these intermediaries that were previously existent in computer science and digital technology have been eliminated as we move to more efficient systems. So banks will not exist. Do not see banks, commercial banks, existing in 1,000 years. Who knows if it's going to be 100 or 200 or 500? It really depends on how society progresses. And maybe we can see kind of an early warning sign of that with Libra. We can see an early warning sign of that with, we can take notice on that. We can get a glimmer of the future by the way the European Union decides to deal with this and other major nation states decide to deal with this Libra situation and with cryptocurrency regulation in the future. And as we see the growth of adoption, we can kind of plan out and start putting timelines on. But timelines are less important than seeing the future, having the vision, and seeing the way that things must inevitably go. So what concerns me is this is a pretty swift, radical movement toward severely diminishing the control or reach of commercial banks, which right now, as inefficient as they are, do act as a buffer because of their own private market interests between the end user and the nation state or the central bank. Once you eliminate that buffer, and we have not graduated from the centralized planning, centralized authority model, what you have invested the central banks and the nation state with is the complete autonomy and complete control over the monetary system, not just monetary issuance, not just interest rates, but complete control for surveillance purposes, for cutting your payment source, for cutting your payment card off, for anything that could be used malevolently, because you've now centralized the power in the hands of a very small group. Whereas right now, because of all the commercial banks, you have that power being diffused and battled against. Remove that, and while we haven't graduated from the centralized model, this is a significant risk to privacy and security for everybody. You cannot centralize that much power in the hands of a nation state or government or central bank. It's too much power. It allows them to do too much. It is an infringement upon liberty, even if they don't have ill intentions, even if they have the most altruistic people. The road to hell is paved with good intentions. So if you take nothing away from that, at least take the concern of this centralization. Also maybe go short sell some stock. Also maybe go short sell some bank stocks, but I'm just saying. So I only have one allocation in my portfolio toward the financial sector, and that is Key Bank. KEY is the ticker symbol for that. I've had that position for quite a while. It pays a pretty decent dividend, so I'm not looking to exit out of it as a dividend investor. I like to hold positions for a very, very long time, and I'm okay with it being a small allocation of my portfolio. But if you are a trader of the markets, a more positional trader, potentially you might want to be looking on the horizon to begin scaling out of your financial business or your financial sector investments, and potentially begin to start allocating those toward, again, if we are looking at a recession, toward more commodity goods, your McDonald's, your Coca-Cola, your Vice stocks, things that are fairly well recession proof. So let me know what you guys think. Obviously, it's a big topic. Obviously, it's covering a lot. Obviously, I might have taken it in my own direction there, but just let me know what you guys think, either in the live chat or in the comment section down below. Yagami, we're all gonna die. Okay. Now, moving on to the second story of the day. And again, guys, it's Friday. That's a lot. That was a pretty heavy dose for Friday moving into the weekend. Overall, you know, where are we at? Our plans are good. We understand price. We understand what we're doing. We're well positioned in our trades. But you know, it is Friday, man, and we don't want to go into the weekend, you know, feeling like this. We don't want to go into the weekend feeling like this. We don't want to go into the weekend feeling like this. We don't want none of that. We want to go into the weekend feeling like this. We want to go into the weekend feeling like this. Okay. You know, the world that we currently live in is a pretty good world. The world does not look like this. All right. We're not there yet. So let's all just take a deep breath. Let's take a step back. We're not looking at something like this. All right. What we want to be looking at for the weekend is something like this. Okay. So let's just calm down and move towards some more lighthearted material. Okay. And the lighthearted material that we're going to talk about first is VeChain bringing the gosh darn beef. Woo! Hey, you know, I had an opportunity to meet with the VeChain team while I was in San Francisco, and they don't throw, honestly, I'm not going to lie, it wasn't like the coolest like after party, but it was okay. Like, you know, if like you just, it was like a meet and greet, right? It was the Biddlers development. I'm moving right along from that. It was okay. What I do want to say is VeChain has announced, so this is the story, VeChain has announced that it is going to be teaming up with the logistics provider, the ASI Group, and together with an existing partner, DNVGL, on their initiative to enable food tracking on the blockchain. This is pretty neat. This is powered, obviously, by the VeChain Thor public blockchain. This new project is being called Foodgates. And it is speculated to be the first such solution of its kind in the world of supply management, food supply management and tracking. And according to the announcement from VeChain itself, the Floodgates is the first time that a public blockchain will be used for tracking food throughout its supply chain journey across continents. It is going to cover the full life cycle of beef production, from cow selection to slaughter to packing, shipping, and eventually straight to the restaurant. Now, the announcement did come at the Chinese International Import Expo 2019, which is the same expo that saw President Xi presiding over the opening of the event, along with French President Macron in attendance as part of his official state visit to China. Now, over the course of their meeting, the pair of leaders did agree to trade deals worth about 15 billion, that's Billy with a B, in the French economy, which included for the sale of beef, wine, and even A350 Airbus jets. Now, it was at the French pavilion of the expo that had President Xi sampling 3 types of French beef, which have been imported using the VeChain Thor Floodgates solution. So this is already importing beef directly into France. Now, China obviously is a significant trading partner for France, with a bilateral trade volume of over 60 billion annually and growing. Now, agricultural products represent a significant proportion of that trade. Now, VeChain is now said to be in a fairly strong position to capitalize on this market of international trade. Now, this does represent one of the top use cases for blockchain projects like VeChain, bolstering supply management tracking, providing everyone in the chain, including the end customer or retailer, access to the information regarding the product's authenticity, origin, and to see whether the product has been tampered with before the purchase or not. Now, as of the time of me talking about this, the VET token has jumped about 10% in the last 24 hours, most likely as a result of the Floodgates announcement. Now, obviously coming back down a little bit with the movement of BTC, but no position on, actually that's not quite true. Of all the tokens out there, you know, I do like VeChain, does have good partnerships, does have good fundamentals. Keep in mind, as we talk about regularly on this channel, the success and goodness of the company has nothing to do with the price of the token, only indirectly through speculation. You are not buying a stock. You do not have share in VeChain. They're never going to pay you a dividend. Now, personally, I think that VeChain has some good token economics. I think there is good incentivization for holding it. I've done my research on these things, but not an investment advice, not telling you to go out and buy VeChain. You have to make up your own decisions. Price is pretty cheap. So anyways, you know, I didn't even like saying that. That's still a little bit chilly. Make up your own gosh darn decision, man. You know, I like VeChain. That's just my personal opinion. I have maybe Blockfolio. One second. About $3,000 of the VeChain. Okay, that's about it. So, small position. Now, I do want to talk about something here in this article. If we scroll down to the bottom, they're talking about this blockchain is no magic bean for the food industry. And this is saying that blockchain has made significant inroads into the food industry in recent years. Businesses have devoted energy to tracking everything from coffee to lettuce, arguing immutable ledgers save time, money, and add security to supply chains. Nonetheless, criticism has come from experts who have identified shortcomings in potential new systems. And they say the weakest link in the chain is not blockchain or any technology. The weakest link is the piece of sticky tape that puts the label on the package. So let me point out the inanity of that statement, because we do know that blockchains like VeChain are great, have a great use case for something like supply chain. Like, it's far better than what we have. We can see that use case in pharmaceuticals. We can see it in food. We can see it in cosmetics. Anything that you want to talk about is going to be better tracked on the blockchain and offers the end user and the retailer a greater degree of visibility and knowledge about the end product that they are receiving. The majority, almost all of the scams come from an interception between manufacturer and retailer, right? That's where it comes from. It's not the retailer doing some weird stuff with their product. It is literally what it goes in the box is different from what the retailer thinks that they are purchasing, okay? Or you have these kind of knockoff fly-by-night, wholesalers that are like, yeah, man, we'll totally hook you up with the latest Avon products. And then they send you like a bond, just like, I don't know if you guys have ever been to like anything in the city where you're driving by and they got the street hustler set up, and they've just backed a truck up and they're selling discount Gucci and they're selling discount, whatever all these nice stuff are. It's not real Gucci. That's not real Gucci. That's fake. I remember I was down in Georgia one time in ATL, and I pulled up to the side of the street because old boy was selling some Air Force Ones, and I was like, man, let me get those. And I got the shoe in my hand and it said Air Force J on that. And I was like, hey man, these ain't Air Force Ones. He's like, no, man, they just like Air Force Ones. Totally good. I'm like, no, dude, I'm good on that, sir. Swerve. Now, the other thing though is, we have to realize that this is definitely, what's my point here? That this idea of the sticky tape being the weakest link, that is no different from the current weak link that is already there. Of course, the retailer can do something funny with the label. Of course they can. That has nothing to do with the fact that in between retailer and manufacturer, blockchain significantly improves the structure in the system. Like, that is literally a nonsensical statement. It literally is not germane to the conversation. Literally has nothing to do with the benefits that blockchains can provide to supply chain management. It's the silliest thing I've ever heard. The only way to get rid of that, again, that's a technical problem. Technical problems get solved. Societal problems are tricky. That's a technical problem. Robots can fix that. One day, not too far off in the future, you're not going to be able to work at a grocery store. You're not going to be able to work at a gas station. You're not going to be able to work at Walmart. You're not going to be able to work at Kmart. It's going to be robots running around. It's all going to be automated, algorithmic AI. And that's just reality, man. So yes, I do understand that. So it's different though. It's not a dividend, okay? Dividends are paid when you own stock in a company, which, here's the main thing. When you have a stock, you have voting rights of what decisions that company makes, okay? You have the ability to influence the direction of the company. You can buy up all the VeChain in the world. You can buy up all the VET tokens in the world. You're not going to be able to influence one gosh darn diddly dang thing that the VeChain Foundation does. Okay? Most crypto projects, and I don't think that VeChain is immune from this, released tokens as a fundraising mechanism to build their company out. It's the reality of the situation. There's nothing inherently wrong with that, but you do have to understand the different economics of a crypto token and a stock. A dividend is very different from what VeChain Thor gives you. VeChain is allowing you to participate in the inflation model of the blockchain. Right? They are allowing you to participate in new issuance of currency, and they are rewarding you for keeping the chain secure, right? Especially individuals who run masternodes. A dividend is when the company itself has done excessively well and they are sharing their personal profit as a company with you as a shareholder. Very different. Very different. Again, with stocks and the risks that come with them, you have voting rights and you are directly tied, your dividends are directly tied to the success of the company. With a token, your successes are directly tied to the speculative nature of the crypto asset on the cryptocurrency markets. Again, there is this underlying argument that just because a crypto project does well does not necessarily mean that the value of the token will go up. You have to look at the token economics. Now, I happen to think that based on the way that VeChain has constructed their chain and constructed their token economics, they're actually pretty good. I think that there are pretty decent token economics for VeChain. But I do want to make a very clear delineation between people who think that staking VeChain or running a masternode for VeChain is in any way, shape, or form comparable to receiving a stock dividend. It's not. Completely different. Talking a totally different animal, bruh. All right. Now, how about some more lightheartedness, guys? More lightheartedness. Even more lightheartedness going into the weekend. 4 signs for when you should cash out during the next Bitcoin bull run. Now, for those of us who were here for 2017 and the blow-off parabolic top, many have scratched their heads throughout 2018 wondering, gosh darn diddly dang it, why didn't I sell? When should I have sold? Well, here are some early warning signs of when you should be looking to exit your Bitcoin position. Number 1, if Tai Lopez ever puts up a Bitcoin YouTube video. That is an immediate warning sign to directly exit the market. And if this sounds funny, keep in mind that for most of 2017, Bitcoin only got passing token acknowledgement from mainstream media or other large influencers. All of a sudden, once it started gaining $1,000 a day in the run up to 20,000 and its all-time high, over the course of about 2 weeks there, everybody and their mother were making videos about Bitcoin and talking about it is the future. It is the next big thing. I am buying now at 18,000 because it is going to 1 million tomorrow. If you don't get in, you're going to miss out. This is the biggest opportunity. Oh my God, price is going down. Why did I do that? Oh man, delete the YouTube channel, pull the video, never talk about it again. Yes, that's how it worked. That's how it happened. I was there making videos. Go back and look. So if you see Tai Lopez get active in cryptocurrency again, skirt, get on out, baby. Step 2, or sign 2, cashing out at only 2.5 Lambos because you don't need 3. You don't need 2. And honestly, if you're going to go Lambo, it's not really the best car for the purpose. Everybody talks about Lambos. You don't want to get a Ferrari. They're better. Get, if you really want to go hardcore with the gull-wing scissor style doors, get a McLaren, okay? Get a McLaren for the love of God. Don't let me catch you in a Lambo. McLaren, that's where it's at. Now, obviously though, in the cryptocurrency space, we use the word Lambo pretty much interchangeably with big gains, dog. So I get it, right? It's a visual representation of cashing in Bitcoin, being an early adopter, and doing fantastically well. Okay, so what I really mean by this and what this article really means by this is, have a goal in mind for how much wealth you really want to get. If you're in it for the money, if you're only in it for the speculation, then ask yourself, how much money is enough money? And have that goal in mind so that you can begin scaling out of your position once you've attained these price levels or once you've attained this level of wealth. There's nothing wrong with that. There's nothing wrong with that. I mean, I could sit here and lecture you about, come on, man, you're totally supporting the centralized state model by not just taking the Bitcoin red pill. But that's cool, man. You guys are promoting the economy. You guys are promoting the Bitcoin community, regardless if your intentions are in the wrong place. I came for speculation and stayed for decentralization. It's totally cool. You guys will get there. Step 3, or sign 3, split your Bitcoin holdings. Very similar to sign 2. In advance, split your Bitcoin portfolio up into, I'm going to sell this at this price. 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 And from a technical perspective, the way to do that is just, where do we go? Pull up the BTC USD chart, go to a higher time frame, and very similar to as you see on my chart, but a little bit more long term, you want to kind of start from the bottom of the market and mark out pivot points on the chart where you would like to be exiting your position. So obviously one's going to be the top of the market. Where's your next significant level of resistance? Right around 11,000. Let's zoom out a little bit more. Okay. So here we go. You know, you want to be like, okay, 6,000, and then we can see some resistance here at like 9,800, and then we've got a level up here around 13,000, and then we've got some levels up here at 16,000, and we've got the all-time high around 19,000. So you could like start plotting those out and say, okay, on the way up, I'm going to look to scale out of my holdings, right? This is the typical buy low, sell high strategy, and that can help you not hold on to a flaming bag of negative returning funds when we are on the back slope of any beautiful run. And step 4, obviously, or sign 4, don't sell, just hodl. And that seems kind of silly to people who only got into Bitcoin in 2018 or who got in late 2017 and ended up watching it go up only to see it come crashing down to their entry price. And then, oh my God, it's lower. It's going like, hey, Bitcoin, come back up. Oh, whoa, there it goes. Oh man, okay, I'm going to buy at 12 now. And now it's back down at 9. So come on, guys, get this together. This is what I do with my long-term investment for Bitcoin. I am a long-term Bitcoin investor and a trader, 2 separate portfolios, 2 separate stacks that do not touch each other. I do not hedge my long-term investment. I dollar cost average into my long-term investment. I add to my stack slowly over time, and I will hold that stack probably forever because I desire to pass that down to my child, to my daughter. I am looking to pass generational wealth down to my kid. That is how families build up the ability to actually grow and not have to have their child ever deal with poverty or financial insecurity or financial illiteracy. You have to start somewhere. You have to put in the work. If you grew up as I did at the lower end of the economic spectrum and you got to a point where you were like, wow, my parents didn't teach me a darn thing about money or investing or savings or making plans for the future or anything, philosophy, nothing, and you realize that you don't want your child to have the same history that you had, then you need to make the plans and decisions now to set your future generations up for success. And that means putting your head down and putting in the work. Just that simple. Get educated, become knowledgeable, join us in the Discord. That is where it's happening right now. And in any way that you want, take those steps toward financial freedom and financial literacy because you need them. If you don't have them, you are playing a rigged game that is where the odds are stacked against you because whether you like it or not, the world is run by economics. Whether you like it or not, the world is run by inefficiency of knowledge. Those with more knowledge prosper, those without knowledge perish. And those with knowledge succeed off the backs of those without knowledge. So do not be the individual that doesn't know anything about anything. Educate yourself and plan your generational family for the future. That's the way to do it because at the end of the day, nobody has your back but you. You need to take care of yourself. You need to take care of your family. All right. With that being said, back to Bitcoin and the lower time frames. Quick check-in. Consolidation directly. We're on the 15-minute time frame here. Consolidation right at that pivotal price that we talked about, right around that 8,800. Currently trading at 88.1880. Let's actually get over to the ByBit chart where we're more interested in talking about again, yeah, right. Just kind of hanging out at the 88.18, looking for either a breakup right here with a volume spike or a little bit of a slip down. Again, looking for here's the low, here's the high, here's our median price right here, right around 8,700, 8,750. Looking for a dip down that holds the low or the closing low above that median price. Again, this is the classic breakout sign that I look for, and you can see it on all time frames, but I'm looking at it on the most relevant time frame right now, which is the 15-minute, guys. Make sure to hit those thumbs up buttons if you have not already. Let's head over to some of this live chat and see what's going on, my friends. Now, water. You know, with that being said, guys, it's been a good show. It's been a good show. I don't really have a whole lot left. I'm gonna scroll through the chat here and see what we got going on. Jack says, I am a man of modest means. I'd be happy with the new Navigator Black Label. That's a nice one. That's a nice one. Andrew is buying a Yugo Hot Rod. The new Rolly Cullinan is pretty nice, but I'm partial to the Bentayga. What about the Rolls-Royce SUV? You know, for the family. Yeah, okay. Okay, dude. Tony Rumble on DLive says, lessons learned from 2017, cash out when your Uber driver starts talking about Bitcoin. You know, what's really interesting is the correlation between that and the roaring 20s, where kind of the meme became, when your hairdresser starts giving you stock advice, it's time to exit the market. What do I make of the recent spat in coins burning billions of their overall supply? Well, you know, let's be careful with that billy word there, because it really depends on the total or circulating supply of each individual token. I haven't really noticed a huge trend with this. I think it's obviously pretty popular because the Stellar Foundation just burned a lot of tokens. By the way, need to bring this to the spotlight. Everybody's talking about this big Stellar burn. By the way, Stellar only burned about 5 billion of their own tokens, bringing the Stellar Foundation's total centralized total holdings of the actual total circulating supply to double. Okay? So in this token burn, guess what the Stellar Foundation also conveniently did? They doubled their holdings of active circulating supply. Way to go. Oh no, I have fallen and can't get up. You know, you guys are absolutely fantastic, guys. It's Friday. I got a lot to do. Let's call it an early day. Let's get into the weekend, man, and let's just relax and be careful. We talked about Bitcoin. We talked about Ethereum. We talked about EOS. We talked about XRP. Hell, we even looked at Harmony, okay? Listen, let's come over here and have a chat. All right. Thank you guys so much for coming to another exciting episode of Breaking Bitcoin. I will see you guys back here, same time, same crypto channel on Monday, 12 p.m. Central Standard Time, for it is no longer daylight savings time. So for those of you not in an area affected by daylight savings time, yes, we are now 1 hour early on everything. Don't let that confuse you. It's not me that makes the rules. It is, I guess, the universe or whatever. I don't know. It's pretty sure that daylight savings time is somewhere in the book of John. Now, I will say, I have heard that over the weekend, some of you get overly concerned because I'm not here. I'm not here. And you guys, we're a community. You guys are used to coming. So what you need to do is you need to go to the Discord, discord.krakencryptocurrency.com, where the conversation keeps rallying right on along throughout the weekend. All right. So make sure to hop in there. We've got live voice chat. We've got our general channel. And if you just need to boost your spirits, check out Meme Wars, probably one of my favorite channels in there. Looking forward to the weekend, guys. As always, trade safely. Links in the description on the YouTube channel for anything that you might possibly need in life down below. I will probably have I'll have the information for the giveaways on DLive by Monday, by the time we meet back here at the same time as we always do on Monday. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, leave them in the YouTube comment section down below. I'd love to engage with you guys. Let me know how you like the new setup. Let me know how you like the show. As always, tell me what I can improve on. Tell me what I'm doing well. I highly appreciate the feedback and the support, guys. You guys are absolutely amazing. Hit the thumbs up button if you haven't already. Consider following or subscribing on whatever platform you happen to be watching us for, and share us around to your friends, your family, maybe even people you don't even like, because this information is important and we need to get it in front of people. If you desire to be a professional trader like myself, if you would like to just take control of your portfolio, or if you would just if you would like to start earning passive active income on the side by trading 30 minutes a day, or however or any way that you would like to, based off our methods. If you guys would like to use our tools and follow our rules, then make sure to check out premium.krakencryptocurrency.com. We are the fastest growing trading group on the interwebs right now for a reason, and I'm very, very proud of that. Big shout out to my team. They're the ones who make this all possible. Huge shout out to all of you: Scott, Ben, Jack, Paul, Alex, Andre. I feel like I'm forgetting a lot of people right now. Adam, Marshall, all of you guys. And if I forgot or missed anybody there, I'm very, very sorry. You guys are absolutely amazing. And Jason, sorry, almost forgot Jason. You guys are amazing, and I look forward to coming to work every single day and working with you guys. So with that being said, guys, I will see you in the next one, man. Have a great weekend and trade safely.